Good morning, everyone, and welcome to the European crossover webinar. And it is FOMC day, and that's going to be the time when we'll actually go and see some of these fireworks going and kick off. Bear with me. And probably until then, we're going to stay relatively quiet. I guess you can call it relatively quiet, although the euro has had one heck of a move, as has the dollar in itself. We can go on and take a look there. Got the dollar making this move here, obviously on the lows here, but let's go on and take a quick look here on the euro. This thing has been off to the moon. And we could actually see this go even further depending on how the FOMC minutes go and whether the Fed is going to go and offer guidance. And that's probably, I think the market believes that, and that's why we're going to continue, or we continue to stay elevated here in the euro, and equity indexes themselves also continue to stay elevated. You can look at the dollar CAD, also on its lows as compared to the euro dollar on its highs. Cable up here in the stars. Seeing the Aussie dollar, look at this, already up here to 72.68, trading here at 72.62. So quite the move that we've seen. Let's go on and take a look at, I was going to say economic data, but once again, I don't think we're going to be going anywhere until we get past FOMC minutes. And you can see here we just had UK PPI data that came out, as well as CPI. But, I mean, the cable is still up here at the highs. Nothing's really going to move it until we get past these FOMC minutes. Now, at the top of the hour, this next hour coming up, we do have current account and HICP for Eurozone. And then as we come into the States, we will have Canadian CPI. But obviously the big mover is going to be FOMC minutes. And we'll go and take a look at what we are on the indices. Same thing up here, way up here in the stars. You can see here the NASDAQ, new highs, obviously in the NASDAQ, new highs in the S&Ps. We can go in and take a look here on the gold market. We had already moved above 2,000. We took a little bit of a dip here, and actually a quick dip here, kind of spooked the market here before a quick recovery and then a slide back. But as I said, we're just up here in the stratosphere in these indices. With that, we'll go on and take a look at the news. The dollar stalls as economic uncertainties linger. The dollar edged slightly higher on Wednesday after slipping to a 27-month low the previous session, but uncertainties about the U.S. economic recovery and a new fiscal stimulus package continue to weigh down the market. The dollar hit fresh lows against most major currencies overnight as the Federal Reserve stimulus program weakened the greenback broadly and lifted the U.S. stock indexes to record highs. The dollar was up 0.15 in Asia at 92.34 against a basket of currencies. There's a strong momentum for investors to want to sell the dollar, said Wantano Morimoto, analyst at Sony Financial Holdings. The euro changed hands at 19:30, having strengthened to its highest level since May of 2018 in the previous session. Sony Financial Holdings Morimoto said that the market was swamped with the stretched long positions into the euro, which could weigh down the currency. However, the dollar selling is the trend for now, so I think there's enough room for the euro to accelerate its rise. The Fed's programs have been pushed to riskier assets to all-time highs and reduce demand for safe havens, even as economic data has painted a bleak picture of the U.S. recovery. What I don't think the dollar will do will drop steadily. There's a high possibility of a gradual weakening to continue, said Minoru Uchida, chief analyst at MUFG Bank. Uchida said it was inevitable the U.S. rates would remain low for a prolonged period of time, mainly due to the pandemic. Yield curves and the long and medium-term interest rates could then flatten. An agreement over a new round of federal and stimulus program spending elusive, although U.S. House Representatives Nancy Pelosi said on Tuesday that Democrats in Congress are willing to cut their coronavirus relief bill in half to get the agreement to a new legislation, with the White House and Republicans providing additional headwind for the dollar. President Trump on Tuesday said in a big shift to mail-in voting in the November presidential election could cause so many problems, officials will have to redo the vote. Separately, the market should limit reaction to the Democrats formally nominating Joe Biden for president. Biden vowed his election, the election would repair a pandemic-battered America. On the data front, Japan's exports fell to 19.2% in July from a year earlier, while the country's core machinery orders fell 7.6%. Against the yen, the dollar also traded last at 555 yen. Investors are awaiting the latest release later on Wednesday of the minutes of the July 28-29 FOMC meetings, with speculation the Fed will adopt an average inflation target, which would seek to push inflation above 2% for some time. Elsewhere in currency markets, the won firmed 0.12% higher to 69165 per dollar after hitting a 5-month high at 69246. Well, with that, we're going to move into the analysis. As I said, it's, we're up at these upper levels, but that being said, it just appears we're going to be relatively quiet until we get to the minutes. So the euro closed at a new high above 119. Weekly resistance level is 1954, which will remain resistance, although the pair rallied to 1965. Support will be 1857. Now here's the deal is that we have here for 1954, which is a weekly level. Look, we can even move higher. It's going to be, I don't want to say necessarily crapshoot, but we could really see some crazy volatility. And I'm just going to stick with the levels as they are right now. If the Fed does go on and adopt that guidance, then we can blow out here to well above 20, probably make a move up here closer to 2078 or so. But I'm going to stick with the levels as they are right now, because then if they don't, we can turn around and fall, see a pretty good little slide back. So I think we could be all over the place. And I'm not going to go on and have the bias chart as on up to, let's say, 2078, on down to, let's say, 1678. So I'm just going to stick with the levels where they at. But like I said, obviously with the guidance, we can push even higher from where we even are at this point. Let's go move into the cable. Cable took out the bias chart resistance at 32.04 on its way to 32.40. Resistance will be 32.85 with support at 30.90. On to the Aussie dollar. So the Aussie got its second consecutive close above 72.04. So the upside target is 73.31. Immediate resistance will be 72.94 with support at 71.32. And on to the Kiwi. The Kiwi rebounded off the recent lows to bias chart resistance of 66.01 as the dollar continued to weaken. Resistance on Wednesday will be 66.43 with support at 65.32. This dollar CAD has just fallen through the basement. The dollar CAD broke lower, but bias chart support level 31.53 held. Support on Wednesday will remain the 31.53 with resistance at 32.35. Well, it's hard to go and say 31.53 when we're actually below that. So we will move it a little bit lower here. And it's going to be right there, which is 31.23. Right there, 31.23. And resistance will be 32.35. And we can see some pretty big moves. As I mentioned, we can see the euro, blow out some further stops and then turn around, start to come back in. And like I said, I think it's going to be all over the place, but I'm just going to go with the levels from where they're at right now and leave it at that. The dollar peso found resistance on Tuesday at the 22.20 level, with support at 22 even. Both levels will remain in place. So that's what we're going to go with. And on to the dollar yen. And boy, this one has been something else. I mean, yes, the euro and cable have really taken up, but God, look how we were pressing 107 and wow, it looked like we could eventually move higher. And then we did take out the 647. That opened the door for us to move higher. Move higher, we did. But can you imagine anybody that got long and look, they got cleaned good, but good, even after they took out this level here. So we've actually dipped in, sure we're revising this. The dollar continued its downside swoon, that is a dollar yen, to 532. And I put support will be the 532, but once again, we've already pressed down here to 509. We're going to go with the low right here, this low, which is, actually, that is where they found support, 509. So we'll go with that for the bias chart support. And resistance is going to be 596. That will remain the same here. And with that, let's go and take a look here at the cash dollar index. And this thing has just been absolutely pitiful. The dollar index fell to the next target level of 92.19 with a new low of 92.19. Support will be the 92.12. And I meant to say 90 with a low of 92.12. So support will be 92.12 with resistance at 92.75. And with that, we'll move into the cross rates. We have seen a nice little rebound here in the Kiwi yen. We had our bias chart support here at 68.80. That's held in place. So we're going to keep that 68.80, but on the upside, we've seen a little bit of a rebound, and that resistance is going to be 70.04. And moving on to the euro yen. We had a resistance here, 26.48. And yesterday the high was 26.10. We're going to go and keep this 26.48. We did take our support at 25.35. The low was actually 25.35. So we're going to go and keep that the same here. That will remain the same. And let's go and move into the euro odd. We had our low for 64.18, and that's going to stay in place, the 64.18, and our high was 65.27. We'll move that. You can see this close right there. That's at 64.94. Actually, we'll go with that close right there, which is 65.10. So we'll drop this down to 65.10 for resistance. And go on to the Euro Kiwi. We got two gravestone dojis here. We had 80.51 was support, but the high was bias chart resistance 82.24. We haven't quite made it to the 82.24. Actually, the high was 81.83. And we've already started to rotate lower at this point. We can move into a 2-hour to get a little bit closer look. Right there. And that might even be a bit of a stretch. We'll go right there. You see that? That is going to be 81.18 on the upside. And on the downside, coming into some support here, 79.65. And moving into the Aussie yen. Still trying to push a little bit higher. We're just going to go with that high right there. It was set in, which was 76.81. A little bit of a rebound here. And for support, the low right here, which is 76.13. And with that, we'll go and move into the guppy. Yeah, 39.72, and we're right there. We're going to go and keep that 39.72. The only difference on the actually, we're going to go and keep the support also the same. So it's really within a 100 pip trading range, although we are right at 39.72. And we did push a little bit higher. We're going to keep that. We do have 40.22 above, but we'll keep the 39.72. And let's go and move into the starting odd. This has been an up, down, up, down, up, down affair. Resistance is just going to be right there, which is going to be 83.23. With support, and we'll go off the low right here, 81.19. And that's going to cover it for FX. As I said, you can see we are up here in the stars. And as I indicated, you can see this market still scoot. We'll take a look on just a weekly. So you can see right here, we can make a run up here easily to this 2037 and blow some stops. So that's what I'm saying. And then, like I said, the ranges are so wide because we could quickly drop right back down. It's just it's going to be bananas. I mean, once we get those minutes, because if they don't show guidance, we're going to see the dollar strengthen lickety split quick. And if they do see guidance, we'll blow out, but I doubt we'll hold. I mean, we'll blow out, and then we'll probably start over the next few days, start to see some profit taking come in. So it's just going to be pretty wild. Until then, we'll stay quiet, although, albeit in these super, super high ranges. And what is there to say on these indexes? They're just at all-time highs. Look at the NASDAQ. Look at the SPOOs. Here's gold. I mean, after we got back up here to 2025, took a quick slide and kind of just meandering around 2000 as it is. But it's, like I said, I think everything will be on hold until we get past the FOMC minutes. So with that, we'll go on and call it a day here. I'll get the bias chart posted, and we'll see you in the chat room. And obviously, the big fireworks will be on the release of FOMC minutes. Thanks for joining us here on the European Crossover webinar.